What is up, everybody? Logan here again with another small account update with Vance today. And we're going to go over our performance so far. I told you guys that we'd keep you updated at least once a week on it. And we're in a roll right now. But overall, we have so far made our goal. We've come a little bit short in the weeks, but hey, last week was a short week. There's only 4 days to trade because of Labor Day. So we're going to see that variance in the performance right out of the gate. And then we have CPI coming out and everything and a lot of crazy stuff this week. So there's a lot, quad witching this week too, if I'm not mistaken. And there's a lot of things that are going on in the markets right now, a lot of volatility, but overall pretty happy where we are. And then we are in a roll, like I said, and once that gets cleared up, the spreadsheet should show us around, 54, 5350 to 5400, which is right on pace with our goal towards the end of the year. So everything's looking good. We're going to dive into our trades. We're still at 100%. We did roll one trade for a small $10 debit. So we have overall been doing really well with this. It's right on pace. If you guys would like to follow along with the challenge, the link is below for the Discord. But I'd like to introduce Vance, and I really appreciate you coming back on for another one.
No, not a problem. Not a problem as always. So as Logan said, we definitively we're in a roll. Can't win them all out the gate. So we're trying to get out of that one without losing any more money, any money really at all if possible. Mm-hmm. We did roll one set for debit, but what was nice is that we did put a put credit spread onto it a few days beforehand, which we made money on. Mm-hmm. So the debit, even though it's a small little debit, it actually was financed by that put credit spread. So it's still a net winning trade. If the trade expires worthless, we won't lose any money, which is nice. So that's definitively something new should happen hopefully this week. Quad witching, like you mentioned, is on Friday, and CPI is tomorrow on Tuesday. And CPI is always a bit of a coin toss. Sometimes the market really likes what they're hearing, sometimes they don't. I guess that is with all things, but with inflation being what it is right now, it's definitely a market mover. So we should know more in about 15 hours from the time this is recorded. So, but as you can see from the dashboard sheet I have here, we actually had an increase of 2.54% on the account for the week, which, given the way we're trading it, is actually pretty good. It is a little bit short of our 4% weekly goal, but at the same time, when you're trading an account like this, especially when you're starting off, you kind of have to trade smaller and take smaller wins until you get a little bit bigger. Once we clear like 7,000 to maybe 7,500, we can really start to open it up, because you can put a little bit more at risk and still not destroy everything. Whereas if you lose on a big trade right here, it can wipe you out. So there is a degree of compounding to it. Overall, we only ended the week $70 short of our long-term goal where we wanted to be. So even though it doesn't seem spectacular, with 2 weeks not quite hitting the mark, we're only $70 short, which is pretty good.
Yeah, we're in a really good spot right now. And we did roll today $10 debit, but then the other one that we rolled, which was really nice, we actually collected 30 credit per contract. So that would bring us a little bit closer to our goal, maybe short a couple bucks there after fees and commissions. And then, of course, we rolled 2 Friday. The reason we rolled 2 Friday was just to dodge the CPI data. Even though it does come out on Tuesday, the market has taken some time to digest things where you'll see, CPI came out, market's up 2%. And then the next day it would be down 3%, right? That's a very common theme this year. So I figured, let's push everything to Friday. Quad witching is red the majority of the time. So it's going to help our roll. And even if tomorrow is red off CPI, that gives us an opportunity to put a put credit spread on, right? And then that'll continue to finance if we have to continue to roll the call side. It will be financed by the PCS. But, if the best case scenario, we get a really good setup for the PCS and we can close the trade for either a small profit or overall break even, or maybe we have a really good opportunity to where on Thursday, we keep holding it, both sides are looking really good, and then we close for a really nice profit on the trade. And that's something
Absolutely.
I'm looking into. And the nice thing about trading the account the way we are is we still have $3,630 available to use. And our whole goal and the start of this was like, when we start, we don't want to use more than 50% of the account, right? Like, you don't want to start a trade out, even if you feel really good about it, because we're in a really crazy time, right? That's why it's a challenge and not the 5K to 10K cakewalk. It's the challenge. So that's kind of where we're at right now, right? Just looking at, okay, how long are we in this trade? Why do we push it to Friday? And now we still have funds to where if we do see an opportunity to even grab, okay, we're going to risk 200 to make 20 overnight on, the put credit side or the call credit side or whatever. That's an extra $20 we'll throw into the account. So it's pretty cool. I like how we're doing this right now, especially financing that role with the put credit side. And this is also why we only get a couple contracts at this level of the trading, just because, this can happen. And we've rallied, I think we've rallied like 5% in 4 days, like something ridiculous. So it's been a little interesting.
Yeah, it feels like what it seems like to me is that we have a situation where with a lot of the big data that's coming up, there just isn't seller interest. So it's compounded with the fact that, when the normal bearish momentum where there's people up top selling to, scalp or whatnot, when they just don't participate, right? Smaller buy stacks can push up the market. And that's where you see lower volume. So that's why if you ever hear somebody say, a big rally on a low volume day generally won't last, that's what they're referring to, is that you have to make the assumption that, on a high volume day, 30% of that volume are sellers, right? And so if sellers aren't coming in, even if it's a seller who's doing something way out of the money, way up top, if they're not participating to help keep the price down, the price is just going to stack up multiplied. And then what ends up happening is when the sellers do come in, they tend to crush it. So I think that's what we're seeing a little bit here. There's a lot of news this week with CPI and quad witching. Bears like to short at the top. And, from where the S&P is right now today, on the SPX, the 200-day moving average is about 160, 170 points above where SPX is at. On an hourly chart, it's about 10 points above where it's at. And at least on today, on the hourly chart, it sold off the 200-day moving average. It didn't even really get to it. It came a couple points off. But definitively on a daily chart, if it reaches that level, there's a pretty high degree of bounce. And my expectation would be, I don't want it to get to that point because that, again, that's 15 points on the SPY above where we're at. So I don't want to get anywhere close to there. But that is definitively a level where, if the sellers don't want to participate today, it's because they're waiting and they want to get to that top. So that's a strong possibility on a week like this.
Oh, absolutely. And seeing last week's move, of course, because it was a short week, right? So you're going to have lower volume. A lot of the big traders are going to be away on vacation and choosing not to trade that week. So you have kind of a basket of things where it's like really difficult to be overly bullish or overly bearish right now. And it's a waiting game until we see CPI. And then, of course, with quad witching so that you can see, these contracts, the monthly expiration contracts get moved around, take profits, taken off, expiring. That's why you always see that volatility. So that's one thing that I'm really keeping in mind as we traverse through September, which is usually a more of a bearish month in general. And I think last year actually started the same way. This is where we were seeing that low volume buying at the beginning of the month. And then around, I think it was around that quad witching time is when we saw a lot of the selling. And then within that next week, we started to leg down even further. And I know some people even call it like September because it's generally the most bearish month of the year, if I'm not mistaken. So yeah, it's, because the summer floats up on all that low volume and then we get ready for Q4. So A lot of cool things going on with this though, and we're still 100% on the challenge, which is honestly pretty remarkable. I've been on fire with my 0DTs as well. So there's just a lot of good stuff that we got going as of lately. But yeah, pretty happy with the P&L so far and the performance of this, and hopefully we can see some relief into tomorrow, because then we can get on the put credit side, especially if we get one of those big CPI days, like a 2% or something to the downside.
Yeah, for sure. It's historically weeks like this have been extremely volatile, and we've had quite a number of green days in a row, and statistically that starts to get to the point where it's getting kind of rare. So there's always a good chance that the next following day will be red. We'll see tomorrow though. We'll see how it all pans out. Like you said, if we get a deep enough drop tomorrow, it really opens up the playbook for what we can do, because we can potentially take the trade off entirely and just get in with a put credit spread. We can add on a put credit spread. We could actually roll the strikes down closer to the money if it's a big enough drop tomorrow. It's a little bit risky, but it's always a possibility that you can play those games and get more credit on the way down. So,
yeah, that's the other thing that I really like about these setups too, is with those, credit spreads, like you were saying, if we have a nice big 2% day, we could roll the strikes down and collect another, 60, 70 cent credit on something that's only $300 wide. So it's like, yeah, you're taking on more risk when it comes to being closer to the money. But if you look at all your rolls, okay, we got 30 credit here, and then now we got another 60 and we opened it. You could, at the end of it, make 20% on that position.
Yep. So definitely depending upon the way the week goes, there could be a lot of different strategies we can employ. And, we're going to probably put some fresh trades on too as well, since we do have about $1,000 in operating capital to still trade with.
Yep. Yeah, because like we said, we just don't want to excel over too much of our buying power, because then it can get messy when you're in rolls and you're like, wow, I only have $500 left. I shouldn't have leveraged this much, out of my $6,000 or whatever. That's where it gets really messy. But
yep.
There's a couple creative things that we, even if we get close to that 2,500 in funds to trade, that we could do. But so far, so good with the challenge. It's up to you if you want to pull the trade sheet up to show them the entries and everything. But these are just some of our entries that we have had. It shows you the rolls. If you guys want to take a second to look over this, see if it's similar to what you guys have been doing, or if it's something that would fit your modeling. We did add a little bit of collateral on some of these rolls, but the only reason I added that was just to extend us into more time, because this week's going to be volatile, and I'm open to a little bit more risk when you give yourself more time, just because, if we are able to get out of the money, we can do a lot more management. Or if it's only halfway breached, you can start reducing collateral out of a trade, and there's a lot of things to, there's a lot of options there. So I've gone over pretty much everything I wanted to in this one. What are your thoughts, Vance?
I think so for this. I mean, it's a small update. We're stuck in a roll kind of, so there's really not a lot of banging news. So yeah, I think we're good.
Really good week last week was all the trades hit. We used the same amount of collateral in every single trade, literally. I think it was pretty solid. But yeah, we're just getting back to our target, surviving this week. And like you said, once we hit that 7K mark, this will be a lot easier to get to 10K, just because we can then risk more. I could see trades going from 600 in collateral to 800 to 900 as like the starting position, right? And we can have 10%. So we could be having weeks where it's like every trade we put on is 90 to $100 in credit received. Oh, it worked out in our favor overnight. Let's take that off, walk with 80, and rinse and repeat. So it's a pretty good spot.
And I think once we get to 7,000, we could safely trade 1 or 2 0DTE SPX contracts a couple times a week. And, you're only risking maybe $1,000 if you're trading 2 a week, or two of them a day, right? But you could potentially make $100. And if you do that 3 times in a week, that's $300 right there.
Yep.
So, you definitively have a little bit more firepower available to you once you hit that threshold where you don't feel like you're just going to get, claptrapped if something bad were to happen.
Absolutely. Well, I appreciate you coming on for another video, Vance, and especially getting all the spreadsheet stuff together too. It really helps, and really appreciative of that. And it just means a lot to us. So I'm excited to see where we go from here. If you guys did like this video, don't forget to leave a like on it. Comment below if you have any questions. Like I said, the link to join if you guys want to come trade with us is below. Vance and I are also working on some seminar stuff too. For anybody who wants to get more in depth with how we trade and some more data stuff that we haven't even shown to the public yet. So there's a lot of cool stuff coming, but I appreciate you guys for sticking around with another one. That's going to be everything for us in this video.